We are joined now by John Rogers, Chairman, Co-CEO, and Chief Investment Officer at Ariel Investments. He oversees $13 billion in assets. John, it's great to see you. I don't know if you saw the very, very top of the show at 6 a.m. this morning. I know you're in Chicago, so it may be early, but we had a big debate, and we made a bet. Joe, Becky, and I made a bet about what May was going to look like. And the question was, do you want to sell in May and go away? And what would happen to the market at the end of this month, given that so many people think that the market is overvalued? That seems to be the prevailing thought. But every time there's a prevailing thought, the market seems to almost always work against you.
Well, I'm convinced that the markets are still reasonably valued. So much of the markets are smaller, mid-sized companies that really still have been devastated this year. And the market's been propped up by the big FANG 5 stocks. So I think when you look at the overall market, there's still a lot of bargains, a lot of opportunity, and we're out there buying.
So you're out there buying. You think if you were going to take the bet on where the market is at the end of May with us, I get donuts, Joe gets some tacos from Taco Bell, and I think Becky gets a hypoallergenic dog potentially. What's your gamble?
Well, I think I wouldn't be surprised to see the market up. We're long-term investors, so you never know month by month. But I do tend to think that as we move into May and we see the states opening up slowly but surely, and the death toll, the tragedy really starting to unfold in a way that will be much more positive. There'll be a lot less deaths, a lot less cases, and that will start to rebuild confidence in America with our consumers and the overall economic system.
So you were talking, though, about how you saw opportunity right now. What areas are you looking at?
We're loving to look at the areas that have really gotten crushed because people are afraid that people will not come back to certain sectors again. And so we like some of the places like some great brands. For example, we bought Vail. We think people will ski again once this crisis ends. We've been buying Madison Square Garden Entertainment. People we think will go back to the Garden one day and watch concerts, watch basketball and hockey. And also, of course, they own lots and lots of land there around the Garden, so it's a really great real estate play, too. And I have to say our favorite name is Invista. They're a dental products company that was spun out of Danaher. It's a really, really cheap stock. Dentist offices have been closed, a lot of them. But, we're going to have to maintain our teeth, and it's going to be something really, really important as people come out of this crisis. Probably people will need more dental services because they have been delaying. So a company like Invista will be really well positioned.
Given that you're going into travel spaces like Vail and other things like that, what do you make of retail?
We've been not investing in retail for a long time. We're very, very cautious. We think that world has just changed so dramatically. You can get whatever you need from Amazon or direct from the product manufacturers. I'm on the board of Nike, and they have a great website where you can get the greatest running shoes that way. So I think retail is an area that we would be just very, very cautious about.
And the other question I was going to ask you is, what do you make of tech right now? Because as you said, the market is being propped up in large part by a handful of big tech names.
I think that right now, whenever you see a handful of names dominate the S&P the way the FANG stocks have, it's usually a sign that the markets are going to change dramatically. And what works in this coming out of this environment, we think will be entirely different than what worked in the last environment. I was talking to the CEO of Lazard about this the other day, and this perspective, and it's one of our favorite stocks, but Ken Jacobs was making the point that when you come out of this, it's going to be a different type of an environment. Active management's going to work again, and just buying the stocks that have gone up and up and a lot in the past will not be the play for the future.